So why is the score so important? Based on your score is how the bank will determine the interest rate to give you if you wanted to buy a house, take out a car loan, purchase insurance, or a consumer loan. For all those types of products, they run a credit check to see how worthy you are as a borrower, and they want to be able to know if you're able to pay them back. Basically, any type of product you want to buy that involves a lot of paperwork and hassle is one they'll run a credit check. Now, and as I said, if you have a great credit score, 750 or above, you're almost guaranteed to get a great interest rate on a home, up to 2 percentage points better than if you had a score in the 600s per se. Now, for instance, if you have a score between 760 and 850, you may get a 3% interest on your home compared to a 5% for a not-so-great credit score such as in the 600s. Now, you may not think that a 2% difference can make a difference on a typical 30-year home loan, but for a $500,000, $500,000 loan over 30 years, you could be saving up to $170,000 in interest if you had an exceptional credit score in the upper 700s versus that if you didn't in the 600s. So in short, it is not good to have a bad credit score. It will keep you poor. So make sure to pay your credit card bills in full and on time, and it will ensure that you get a great credit score that will save you hundreds of thousands. Also be sure to pay your student loans in full and on time every month, as well as any other bills that you're due monthly. If you follow this tactic, you'll soon be joining the ranks of the rich. Now, if you're wondering how long it takes to get an excellent credit score, I got my first credit card in college at around 20, and my only credit history at that time was that I had student loans. And at the time, they told me I had a score of 660, which is not great. Then again, I had no credit history and was young. Well, I wasn't looking to buy a house, so it didn't really matter. But after 5 years of paying my credit card bills in full and on time, as well as paying my student loans on time and in full, I now have a credit score of 770, which is excellent. So it really doesn't take long, but as I said, you can miss a payment. You're probably wondering, how do I even know my score? How do I check on it? Well, it turns out most banks and credit card companies now report your score to you for free. Once you get a credit card, you just log into your credit card homepage where you pay the bills, and there should be a button that says, show me my credit score, and there you have it. Now, there's a myth that if you keep checking your credit score constantly, it will lower your score. It's just plain false. Don't listen to anyone who says that. If you personally look at your score, that's called a soft inquiry, but it doesn't affect your score, so don't be afraid to click that link. Now, your score may decrease by just a point or two if you have lenders looking into you. Think about it. If I apply for 2 credit cards and a mortgage all in the same week, you're going to have all these eyes looking at you in your report. And the credit score calculation picks up on that. The calculation equates lenders looking into your credit score as a bad thing because they are thinking that, what are the odds of this guy not being able to pay his bills? All these other people are looking into his scores, so that's what kind of sets off the trigger, and that's what affects the score, just going down by a point or two. If you remember a few minutes ago, I said 10% of your credit score is the types of credit used or applied for, which falls into this bucket of a lender looking into your score. So if you are applying for a new credit card or a mortgage, do try and spread it out. However, your score is most likely going to return to where it was a month or so after you applied for credit. It does not permanently damage it. It's only a point or two, so it's not really a big worry. Now, I want to quickly walk you through how to apply for a credit card so you know what I'm talking about. So here's a Trace credit card. I just Googled quickly and I found it. As you can see, there is no fee for using their credit cards. It used to be that some credit card companies would charge you an annual fee for using it. And it might have been maybe $70, $80, $100. But a lot of the banks, practically all of them, don't do this anymore. Because when one credit card company said, I'm not going to charge a fee, and that attracted customers, well, the other credit card companies started doing that as well. So it's not going to cost you anything to use a credit card anymore. And you'll see on the left the interest they would charge you if you did not pay your bill in full and on time. As you can see, they're running a little promotion. They won't charge you any interest for 15 months if you didn't pay them back in full and on time every month. And after that 15-month period, you can see that the interest rate jumps between 15 and 25%. Now, we don't want to worry about this, though, at all, because you're never going to be charged interest, because you are going to pay your bill in full and on time every month, regardless of these promotions. You'll then see as a bonus that they're offering me unlimited 1.5% cash back on all my purchases. So if I spend $10,000 on my credit card during the year, I'll be getting back $150 in cash over the course of the year. And these points are calculated monthly, so every month you'll get 1.5% of what you spent. With no limit, you can spend as much as you want every month. So what you can also see as a bonus to try and get you to sign up, they'll give you $150 cash if you spend $500 in the first 3 months. Now this is quite a deal. This card looks pretty good. You know you're going to be spending more than $500 in the first 3 months. So I think this card's a win. We're going to look into it. So as an example here, I just clicked apply and it takes you to the application process. I just put in a fake name and a fake mailing address. It doesn't really matter. I just want to take you through the process. So here's the part I just entered some fake financial information. Like I said, you really can put anything within reason into your gross annual income. And same thing with expenses. I just put $60,000 and $300, so the bank will see this, and they'll be thinking, wow, this guy's got practically no bills. You should be easily able to pay us back with that high salary. I think we're probably going to give him a high credit limit. And based on this information I have here, they might give me a credit limit of $10,000 once I click next. So then the last page, this is where I actually have to fill out my social security information, to verify that I'm an actual person and that I'm not a robot. And this also is going to link to my credit score as well. So whatever I'm entering here is what the credit card company gets, but also the credit score company gets to link the two. Now, I didn't want to continue with this page. I don't want to put any fake information in. But once you put in your own personal information and click next, it'll go right to a processing page. Within about 10, 15 seconds, it'll tell you whether you're approved or not. Now, if this is your first time getting a credit card, you might get a message that says, well, we can't come to a decision right now, but we'll get back to you. So within a day or two, you'll probably get an email that will actually say, okay, you're confirmed. You're probably not going to get denied a credit card if you've never had a credit history before, because the bank wants to give you it. Now, if you have a bad credit history and the bank knows about it, well, they might deny you depending on how bad your credit history is. But like I've said, if you've never had one before, this is the way to do it, and you're probably going to get it. Now, this last slide, I just wanted to show you why it really pays to have a good credit score. So on a $500,000 loan, I would wind up paying $321,000 in interest to the bank over 30 years. So a total of $821,000 I would pay back to them. That's terrible. Can you imagine now if my credit score was 620? I had to pay them $992,000 over 30 years. So as you can see, it really does make a difference to have a good credit score if you're ever thinking of starting a family or buying a home. Now you're probably thinking, well, Nelson, I thought for credit cards that they don't charge you interest if you pay your bill in full and on time every month. That is true. However, for a home loan or a car loan, you will always be charged interest. There's no way to get out of it. Even if you have a perfect credit score, you will still get charged interest on these big purchases, such as a house or car. Now, the only way to not pay interest on this is if you don't take out a loan and you pay for the car in full or the house in full. But a lot of people don't have $500,000 sitting around in their bank account. They just don't. So this is how the bank makes their money. That's why it really pays over the long term to have a good credit score. As you can see, the difference between 3% and 5% is almost $170,000. So as you can see, the difference between a 3% and a 5% interest rate is $170,000. So it really does pay to pay your credit card bill and other bills in full and on time every month. And that's the end of our lesson. I hope you learned a lot in here. We're going to move on to the quiz and we're going to keep building, and we're going to go on to lesson 4, savings and investing.